and hopefully actually you can see me to every single channel that we are holding. I will refresh my screens to see whether you can see me in both Facebook channels, YouTube as well. Hopefully, yes. I was a bit in a struggle today to... Okay, it seems that you're okay. My colleague and my head steward will confirm about the sound, but I'm not really worrying about that. I think everything will be just fine. So, NFP in less than 3 minutes from now. So sorry for the sound. It's we have some very heavy raining since this morning, so you might hear a bit the rain falling on the ceiling. So this might be a bit disturbing. I'm really sorry for that. So let's have a quick briefing of what's going on. Not much, to be honest. A good Friday, so markets are closed. So that's why we have some low liquidity in the market, some sideways movements, but the sideways movement are also ahead of NFP, which is expected to be very strong. So in the chat, I can't see anything. So hopefully, let me check the sound. Hopefully you can hear me actually. Yes, you can. At least in YouTube, I can see that you can. So it's your session. I'm I will be very glad to see your questions. Some of you might be already on bank holidays. You might be celebrate the Catholic Easter. So that's fine as well. It's a Friday after all. So quick briefing. We are expecting a very strong number today. So in a minute, actually, we have seen growth in the US economy from data perspective. We have seen Mr. Biden alerting for further stimulus, gigantic stimulus as well. So the US growth, the fiscal stimulus, the better than expected labor market that we have seen, in 2021, the good progress in vaccination, all these are bringing back jobs. They are opening jobs, they are creating new jobs. So that's why today we're pretty much expecting a very good number, especially because we have seen also from some stages cancellation of all restrictions, like Texas, for example. And we have seen also the weekly jobless claims to dropping lately. This is why the market is widely anticipated at 500,000 numbers today, or even 630,000. Some are even expecting more than that. So let me refresh my calendar, and I would like also to show you my calendar. Let me just to check whether it's already out, because I was a bit late. So now, so let's see. Okay, let me share my screen with you. See the numbers together. Share Chrome. Excellent. I think you can see it. Hopefully. No, you okay. Here we are. Perfect. So, sorry for that. So already out 916,000. Oh my God, that was way more than expected. Nearly double. This is a huge reading. So I need to shift quickly to the huge reading. A huge reading. It's the first time that I can see that actually during my live analysis. I haven't faced like live such a big number. That's impressive. So double of what was expected, nearly double, and this was revised and around 100,000 greater. The previous reading was revised higher by nearly around 90,000 more. So that is impressive, and this should have shaken the markets. Hopefully you are here with me. Oh, you are. Perfect. Let's see the MT4 together. This is massive. Indeed, the US economy supported very, very well a rebound on the okay, we have seen dollar being weaker apparently. Let me fix my screen as well. Excellent. Okay, now we are where we're supposed to. So dollar jumping initially on the news. This is a 15-minute chart in US dollar. So breaking 19 level, a level that has been seen like the back of in the beginning of actually yesterday. It was nearly. Let me just quickly. Okay, it's above the 23.6 Fibonacci level from end of March. Dip 93 spike, but quickly turn lower. Let's see the breakout of this reading, because this might explain why it's turned down instead of moving up. So let's see the breakout. Let me double check, okay, what's going on over here. And it's quite difficult to share again the calendar, but I will do that because it's important to understand why this is actually happening. So here we are. We could see, and let me just see. I want to see every single, the full breakout of the NFP. So come on. Here we are. So 915. 916,000 non-farm payrolls, double than anticipated. However, the average hourly earnings dipped lower, 0.1% over here in a monthly basis from March. It was expected to grow, but instead it contracted. So 0.2% was expected. 0.3 was last month. It actually revised higher, but it came below expectation, actually -1. Labor force participation pretty much same as last time. Unemployment rate, as was expected, 6% decline from last month, so slight improvement on that perspective. However, the report is landed in a Good Friday. You know that it's a thin market because there is low liquidity and the majority of the markets are low, but this is definitely a very, very strong report, which that's why quickly pop dollar higher. However, this decline might be just in regards to the week to to the thin date, to the end of the week, but mainly due to the thin of the day. Maybe some pricing already. Not really. I cannot really tell. We need to wait a bit, at least the 15 minutes candle to close to see what's going on. But definitely, guys, what you should have in mind is that the let me just turn back to the MT4. This is very, very difficult. Here we are. And this is supposed to be okay, perfect. So the report definitely should have supported dollar to spike it further, but instead we have seen this quick drift lower back to 92 area. So let's widen. Actually, let me see a bit what happened on the release. Up, bump down, 5 minutes chart. Aggressive selling for some reason. Maybe there is some kind of the low. We have seen this exaggerated moves, mainly because of the light liquidity, but definitely a strong report that should supposed to help actually dollar. So let me double check whether there is something else happening, and I can't see it because I'm live right now. No, in the day in the actually the current affairs are not really telling me anything, so there is nothing new. So we might see support sooner or later. Let's wait and see though. And let's cover actually other assets. Let's go through the charts and we're gonna see whether this was temporary, this reaction is temporary or not. But definitely is a very strong very strong report. The number of people employed actually for this economic season, it's like insignificantly high. As I can see from the U.S. Bureau of Labor Statistics, that they have all the breakout and every single number out there released already. We can see that there is a huge improvement in the labor market, reflecting actually, as I said initially, the continued resumption of the economic activity in the US solely. So that was something that has been curtailed, okay, due to the fast vaccination. Okay, so we've seen was a week ago or more, Mr. Biden saying that their goal is to achieve full to vaccinate actually adults in the risk groups by May 1st. And actually, this is something that is indeed feasible in the United States. Of course, I'm referring only to the United States. As I mentioned in my report yesterday in regards to the NFP, the goal to offer immunization to every American by May 1st is actually visible. Why? Because more and more states have already achieved that milestone, okay? So they are nearly there. So along with the fast vaccination, the cancellation of all restrictions, the drop, and the actually how fast the vaccinations are in United States in comparison with every single other country in the world, could make that goal achievable. Okay, and this is something that also supports in general the optimism, the optimistic side in regards to U.S. economy. So let's see a bit of the household surveys. Then so everything okay. Our earnings by industry and etc. Higher than expected. Excellent. So we can see that. We can even see that even though this huge number that we are getting out of the blue and very interesting, I will say, very interesting in this breakout is the fact that the biggest driver for the jobs report that we have just got is actually the leisure and hospitality sector. Remember, those two sectors, leisure, travel, hospitality, and etc., are the sectors that suffered the most during the pandemic. So what that is telling us that hospitality, travel, tourism, leisure sector is back. So think the hotels are opening, the airlines are starting their flights. So that's why we have this recruitment, this job in hospitality and leisure sector. So it was around 280,000. That's not as much as you will think with this big headline with 280,000 out of 900,000 is like nearly 1/3, okay? But that means that there is more rehiring in those sectors, the sectors that have been suffered the most, and there will be even more to come, okay, to take place. And these numbers are actually expected to remain high for the months ahead because of the fast vaccination. Nothing else than that. So this is quite crucial. This is a hint that the upcoming NFP numbers could be, if not as strong as this one, they will be definitely strong, okay? Now that we have seen the hospitality sector back. Okay, the markets haven't really relaxed yet. We can see that. Let me go back to the dollar index over here. This is a 30 minutes chart. Let's shift to the 15-minute chart. It doesn't really help, but okay. Can you see that eased a bit? So it was that volatility that we tend to see every time that we have NFP releases, but it looks to have like slowly calmed down a bit. So I will just go through your questions until we see the dollar really calming a bit. But you can see that there is a big fight over here. Sellers are pressuring down, and maybe on the prospect of buying the dip or something to push dollar further to the downside in order when we have the fresh week on Monday, when the markets will reopen to achieve a better price on dollar. Who knows? I cannot really tell, but we have seen a big fight over here. You see, they are pushing down. They even achieve a 92.80 low, which was the low of the whole week. Okay, can you see that? But on the other side, and the hourly chart is clearly stating this indecision. The 1 hour chart clearly shows this fight between bulls and bears. The 30 minutes chart on the other side, you can see that it drifted down, achieved 92.83, which is the low of the day, but buyers are trying pushing higher. So right now is around the mid on this session, on this 30-minute session, which was during the release of NFP. So good morning, Horon. Is the dollar up today? Actually, it should supposed to be supported due to the NFP, but we have seen the market's a bit, how can I say that? A bit volatile. It's the best word for that. A bit volatile right now on the release. So we need to wait a bit for the markets to calm down to see a confirm like outlook for dollar, like a more clear outlook, because right now this dip cannot be really explained by the NFP. The NFP was strong, so this was supposed to be a very good factor for further appreciation of dollar and not depreciation. Okay, so the echo is too much. Not sure whether it has been fixed. I will try to keep let me just try something. I'll try to keep the microphone next to me. Hopefully this helps, dear gift. Good morning. Hi. Are dollars strong? Not for now. They're in a very huge consolidation. Let's see other assets as well, because it would be interesting to see other reactions. Yeah, so dollar yen to the upside. So yen continues being weakened against dollar. Okay, retesting the high of the day at 110.67. Let's see. Just let me go quickly. Oh my God, that's a big indecision in euro dollar over here. Drifted down initially. Was it that? Let me see quickly. Big indecision. You can see that it dipped down. Actually, it moved up, then dipped down, and now it's turning up again, but this is just a 15 minutes chart, so give me some time for this 30 minutes candle to close to see where it's actually hitting towards to. Can hear you, but sounds not good. Anyway, continue. Oh my god. Why? Hopefully now that I put it very close uh, to my mouth, it's actually better. Hello, data is out. Yes, I haven't seen your questions to be honest up to now. Which dollar pair going to be strong? Okay, let's start with that. Okay. Which dollar pair going to be strong? By saying strong, you might mean that it's moving upwards, or I'm not. This is not a very clear question, but what I can tell you, I will start with dollar yen, which we have seen for many uh, weeks, actually the last 3 months in 2021 in general, that dollar yen has found actually a strong push to the upside. So that means that's a dollar yen daily chart, guys. That means weak yen against a more stronger dollar. So these, since you mentioned dollar pair going to be strong, this is a strong rally for dollar yen, which, as you can see, momentum remains quite strong, flatten a bit, suggesting a bit of a consolidation, but the yield differentials between US Treasury yields and Japanese Treasury yields are widening. So this is because of the US economic growth, which in contrast, Japan is not giving so big, it doesn't show nice or at least sufficient economic recovery. This, at least if we compare it with the US. So this, the widening of the yields, is something that supports further the dollar and pushes the dollar higher in contrast with yen. So the momentum, interesting, the momentum of dollar yen hasn't really run out of steam. So it remains positive. So key will be interesting. A key will be to sustain this support above the 110 level and actually to break the 111, because if it managed to break the 111, okay, let me go to the weekly chart. We are already, by the way, back to pre-pandemic levels, okay. So if it managed to break 111 levels, okay, the very next resistance area are coming back to 2019 2020, which is 112 area, another round number, or even 112.20. So you can see how strong the momentum is intraday, in a daily basis, in a weekly basis. In a weekly basis, it has even turned positive. RSI crossed 70 barrier last week, and there is further steam to the upside. Further extension of the signal line in the weekly chart could prompt more buying pressure for dollar yen. So keep that in mind. For the upcoming week, for Monday, when the markets will open again. And let me confirm that, because I'm not sure whether every single all the big all the big stock exchanges will be open on Monday. Let me double check right now. So fifth, no, actually. Australia will be off. Germany will be off. So actually, New Zealand the same, United Kingdom the same. So actually, guys, key date next week will be Tuesday, when we will have the majority of the markets back after the Easter. So United States are coming. are coming back actually on Monday, if I'm not mistaken. Yes, I can see that they're not closed on Monday. So yeah, US will be open on Monday afternoon, and all the rest, or the big ones at least, will be open on Tuesday. So volatility could be back on Monday afternoon on the US Open, and on Tuesday as well. So all these you need to, because it was a confluence of end of quarter, Easter holiday days, so closure of the majority of the markets, and the end of the week, we might see a lot of volatility on the open, on the Asia Open, on the Europe Open, on the US Open, because people reviewing their charts, placing pending positions, or repositioning their portfolios after tonight's closure, okay, in order to be ready once the markets are back. So that's why I'm highlighting that you should do something similar as well. You should monitor, you should see how the markets are closed, okay, and take any decisions for the upcoming month, for the upcoming week, for the reopening of the markets. So that was on dollar yen. For now, dollar yen actually spiked higher. Let's zoom in. It posted, actually retested the high of the day again at 110.67. This is the hourly chart, so try to break again the pivot point. It didn't manage, it's still below that. Let me put the 30 minutes chart, which you can see that needs another 6 minutes to close. Until we have that, let me see whether there are any questions. Okay, gold. Status of gold on Monday. Okay, let's start with gold. Actually, you're absolutely right. So, sorry, I'm a bit mess over here today. Actually, okay, so gold. Actually, gold is quite. Let me just quickly. Okay, here we are. Okay, here we have gold in this 1 hour chart, and we have seen, if I zoom out a bit, we have seen a nice strong rebound since yesterday, actually on the opening of the second quarter. So in the second quarter that started yesterday, Monday, Tuesday, Thursday, and today, we have seen bonds and stocks being well supported, but also we have seen gold as well. So we have seen that it started, the gold started to get a bit bullish again. Okay, so let's not forget that gold is an asset in general, precious metal, that in which we have seen it depreciating significantly. Oops, you cannot see anything. Why? Sorry guys. Don't know why this happened. Now it should be okay. Yes, now it should be okay. So as I was saying, let me double check. Yeah, so we have seen a rebound, but let's not forget that gold has been one of the assets that was depreciated the whole 2021. Also, is the initial decline started back in the mid of 2020. But let's focus a bit on what happened lately. So apparently, on the new quarter, we have seen that the gold has found some kind of a support, some kind of a rebound, and this has to do um, mainly due to some uncertainty with what's going on in the vaccination right now and the rollout of vaccine rollout in Europe, but mainly what could be the driver of these last 2 days. Um, Last 2 days rebound, okay, might be some kind of end of the quarter of the first quarter flows, or the start of a fresh new quarter, um, since the gold overall has really underperformed, sorry, um, like other other assets like Bitcoin, for example. We have seen also Bitcoin finding support as well. So gold latest bounce might be because of the sell-off that we have seen in the end of the quarter this week until Wednesday. That was very powerful, and that could explain this bounce of gold in contrast with other assets that they have seen sell off. But in long term, gold is pretty much interesting, okay, because as I said, it's a continuous decline, well off the 1800s territory, in a continuous dip. So there is nothing really from the technical analysis side prompting to like a reversal of the overall outlook. Now, um, so the decline could be resumed, but we cannot really tell. Look at that. We have this nice floor that has been maintained. If I put that on, sorry. So let's move that on, which has been maintained for the whole March. Okay. So as long as this floor remains untouched in April or in the upcoming week, if you prefer, okay, then this floor, along with a potential, okay, break of the, let me put also the dip, also with a break of 1760 area, could suggest an improvement in the outlook of gold, okay, on this prospect of reopening of the economies, or loosening of restrictions in the US, not in Europe, but some countries started uh, like relaxing a bit the restrictions, like UK and US, Israel. So this might be on the prospect of a potential reopening of the economies in the second quarter. So what is key for the next week is for you to keep an eye on this key resistance level at 1760 and on a potential breakout of the March floor at 1676. So key resistance support level to be seen. We closely monitor. What else did I wanted to mention about gold? Yeah, so keep an eye on these two. For now, the market is closed, so I cannot really cover something else than that, but telling you what you should take care of on the upcoming week. Okay, so for now it has rebounded. It nearly actually it has recovered more than 50% of this tumble that we have seen in March. But what is keen for next week is to see whether it will manage to continue upside, breaking the 1760, or instead it will turn back down again. But even if it turns back down, if we don't see a breakout of this floor, we cannot really confirm further depreciation of the asset. So hopefully this reply to your question, dear Kiko. Let's move on to pound. So guys, I cannot cover everything, as you might know, because some are already closed. So for example, gold over here, it's closed since last night. So the only thing that I could say is how it moved so far and what key resistance support levels you should monitor. So let's see pound, since Richie asked for it. Okay, pound, the currency pairs are open, the currency market are open anyway. So let's move with the 30 minutes chart. We have seen like a new actually a dip down to 113.38 area, round number, and above the pivot of the day, which actually found some floor, some support, and turned back up again, very close to the open price. So I shifted to the 1 hour chart right now, and you can see how, let me just highlight that. Can you see that eventually during the NFP day, during the NFP hourly candle, despite that selling pressure that we have seen, the buyers managed to bring the price back higher again, very close to the open price. So this is a clear indecision. But as I said, this report should support dollar. Okay, so by support dollar means that cable should move further down, should turn back down again. Okay, so however, the pound is a bit tricky one. Why? Because pound, along with along with the US dollar, is one of the strongest currencies. Okay, it's one of the strongest currencies since the pandemic mania. So you can see that's in strong rally since March. Okay, so even though, let me just, even though this is a daily chart, even though in the end of February it started depreciating, from fundamental perspective, okay, the pound remains. The pound actually, the fundamentals are really supporting the pound because London has reopened. In general, the US economy is back, has reopened. They have the fastest vaccination after Israel. They have already vaccinated the majority of the adults in the UK. So that's why, despite this decline that we have seen, may be affected by what happened with AstraZeneca, and that fight against AstraZeneca vaccine, and also because of so as I said, it might depreciate it because of that fight with AstraZeneca, but maybe because of the dollar strength as well. However, key, okay, because we are speaking about next week's opening, which is actually the first actually the first working week of the April, of the second quarter as well, with markets back, the stock exchanges back in place. So despite this depreciation, it still maintains. It is still actually, if I don't put it since March, I will just put it since the September. It still holds in the high area of the past 2 quarters, over the past more than 6 months. So can you see that it dipped down, remains, however, 38.2 above the 13.2 percent, and despite the appreciation of dollar, we have seen that it's attempting to move higher again, but the momentum remains neutral. However, what you should take care of right over here, let me remove the daily high and low indicator. Okay, will be clearer now. So this is the so far performance. Okay, so you can see that this is the current daily candle. What is key to be monitored on the closing tonight will be whether we will have, okay, a breakout or a closure if you prefer, above this confluence of 20-day and 50-day moving average. So key will be the 130.43. Let's round it up to 138.50. 138.50 is a key resistance area, so we should closely monitor whether we're gonna see any breakout tonight or on the open next week above this level. As long as we don't see a decisive reversal back above this level, then we might see further consolidation within 38.50 and 36.45 level. Okay. In the meantime, on the flip side, if you prefer to the downside, okay. So let me put the 4-hour chart. It will help us better. I will put another Fibonacci level over here. So a pullback instead, and a drift back below the 138, and more precisely below the 138.60, which is the reversal of this more than actually this week's gains. It could prompt again, it could signal again a retest of the latest low that we had at 136.70. Okay, so key resistance level 138.50, key support level 137.60. If 138.50 breaks higher, it could open the doors to the latest highs in the mid of March, beginning of March, while a pullback below 138.60 could retest again these lows that we have seen in March down to 136.70. So keep an eye on that. Yeah, positive news indeed. Let's see again what's going on with dollar index. It started strengthening again, guys. Have you seen that? Because to be honest, the jobs report was very, very positive, was huge. So now the theory started becoming indeed like true. But this might be some, I don't know, selling out, some stop outs, pending stop outs, most probably. So this might have been something kind of a stop out on 93 area drifted the dollar index lower on the release of the NFP number. But you can see that the 30 minutes chart, the next 30 minutes candle actually started boosting higher again, recovering so far this decline, but we have another 18 minutes until this candle close. So yeah. Hello from Barbados. Hello. What this says for gold? I replied already. I think you were here when I replied, because it was the very first one that I covered. Just covered pound as well. I'm on buy on gold. Uh, it's closed right now, so I assume you have some pending order. I cannot really tell you guys what to do. I can only suggest. I can only not suggest. I can only state what I see, how the momentum is. So intraday momentum was yesterday positive. The market is closed right now, so I cannot really tell anything, but you should definitely keep an eye on the levels, resistances, support levels that I pointed out earlier. Hello from Indonesia. Pound pairs. We have already this in pound. So okay, sorry. The data were solely for US, so the NFP number. Now, if you're asking me in general for the pound pairs, I could use my traders board too. And if you click on the traders board tool that we have, okay, let me just round it. So pound for today at least remains a bit sideways, quite choppy. It had, like, pound has actually managed to gain some ground against euro. So this is euro pound 1 hour chart. So it reversed from the day of the high of the day, turned down to 0.85 level, but this is a key round number, and intraday in the near term a nice support area, which if it's broken, it could retest the 0.8490. This is what I can tell you about the intraday picture of euro pound. Overall, it's in a downtrend. You can see that. So a breakout of the 185 could bring back into our attention the 85.90. But a lot of consolidation is what we have seen since yesterday, due to the Easter, I'm afraid. Okay, but pound overall against euro, this is a daily chart, remains very strong. Okay, so you can see that this euro pound has been drifting since the end of December. Drifting, breaking the support of the year. And if I put the weekly chart, you can see that it is getting back down to 2020 low area. It was a decisive break. So pound remains decisively strong against euro. I will highlight once again, UK is in a better economic position than euro. This is what is driving pound to be stronger than euro. This is what is driving euro pound. So if I just put my daily template, okay, perfect, zoom out a bit, you can see that the 20 day moving average has crossed decisively, bearishly crossed the 50-day moving average, and has also crossed last week the 200 as well. So the negative outlook for euro pound is stretching, is extending actually. And this week we had another decisive breakout of the support that we have seen, February and actually in March. Can you see that? It was a support that we have seen since February. So it was 1, 2, 3, 4, 5 weeks support. This is weekly chart. 5 week support which managed to be broken this week. And the momentum, if I show you MACD as well, MACD, the momentum is aggressively lower, so the overall outlook for euro pound remains negative, and and the next support area could be really found back in December 2019, October 2019 period, so down to 0.82 area. Now in the daily chart, for those that are interested in the short-term, near-term time frames and key support levels, so you can add your Fibonacci extension. And let me zoom out a bit to show you some key next support areas using Fibonacci extension. So the very next support area could be found at 140.8440. The very next could be seen at 0.83. Okay, yeah, another way of doing this is, oops, sorry. Yeah, is with the inverse, okay, with an inverse Fibonacci level. But yeah, immediate support areas could be seen at 0.8440 and 0.83. So that was on pound. We have seen euro pound, we have seen cable, pound dollar. Also, let's have a look on pound yen, since you asked in general about the pound pairs. And I don't have it here. Pound yen. Okay, let me fix it in my daily chart. Perfect. So pound yen, I told you in general yen is very, very weak. Japanese economy is not showing significant recovery signs. Also, there is a huge contrast with UK and US. We have seen pound yen continuously moving higher in March, since March actually, recovering all the losses that we have seen in March. If I put the daily chart, you can see that initially dipped and then it recovered, breaking significantly yesterday on the new quarter the latest high at 152.60, and is moving further to the upside. But overall, okay, you can see that there is a strong positive momentum. Can you see that actually? Strong positive momentum resumed. Okay, resumed. So you can see that, okay, it was a pullback, like a recovery of this long-term, more than 6 months rally, but pullback, well supported by the 50-day moving average and the Bollinger's low area, recovered all the losses that we have seen in March, break the latest high, and extending further to the upside. So momentum is really look to be resumed right here over here, with MACD crossing again above signal line. RSI extended to close to the overbought territory, but it didn't manage to cross it again. But as long as the pair it has this 50-day moving average untouched, so as long as it is still supported, well supported by 50-day moving average, then it remains to the upside. It remains in a strong positive outlook. So yeah, any decline like this one is just a pullback. So what you should take care of on the downside, support is at the 20-day moving average at 151 area, while if we see it extending further to the upside on the opening of Asia session next week, then the next resistance area, I will apply my Fibonacci on these swings that we have seen. So the next resistance area, immediate resistance area, could be found on the 153.87, which coincides with February's 2018 high, and the very next one is up to here 156. 60. I know these are far away, but because I want to give you an overall view of what key resistance and support levels you should really monitor. Okay, so these are the very next key resistance area to be seen, while on the flip side 151 round number and 20-day moving average could, if it turned back down again, could suggest a reversal down to 148.50 March support, or even 147.40 area. Okay, key resistance and support areas. So let's move on. What's your ticket on dollar yen? I cannot really tell you guys, but okay, I already mentioned dollar yen is in a sharp rally. Momentum supports the positive overall outlook in the daily chart for dollar yen. RSI the same, is not turning lower, is still pointing for further move within above 70. The rally, we have seen that is still extending well above all moving average over here. So a breakout of 111 could suggest further appreciation or even a potential retest of the next resistance area at 112.20. So in the overall picture, dollar yen remains in a positive outlook. Intraday now, you can see that despite this depreciation yesterday and in the beginning today ahead of the data, as soon as the data were out and were decisively strong, dollar managed to find ground again, and dollar against to the upside because we have again a strong dollar. So right now, if you are interested in intraday analysis, dollar yen move higher, breaking the pivot point of the day, as also also breaking the previous high, actually day's previous high at 111.66 and extending higher. Right now it's at 111.74. So next resistance is just three pips higher. A break of it could bring the asset back higher again to the second resistance of the day at 111, or even prefer to be precise, 110.95, which it is the second resistance of the day, but also the high that we have seen this week. Okay, so keep an eye on that, my dear Shibiyam. Okay, we have seen gold, guys. Okay, dollar strong or weak? Strong. Okay, euro dollar trend, please. I thought we seen that. Okay, yes. Now that dollar looks to be calmed down a bit. Okay, let's see euro dollar. Dollar found some ground again after that tumble in the NFP, turning down, breaking the pivot point in this euro dollar 1 hour chart, posting a new low at 117.48, retesting the 50-hour moving average. So okay, what we have, let's okay guys, so we have a clear dip. This is the beginning of the day. Okay, here it is. It was the beginning. So it was consolidating the whole morning, and ahead of the date started dipping, and now it resumed dip on the better than expected, well, on the impressive actually NFP. So the you can see over here RSI is turning lower. Let me put stochastics, which is the okay, and yeah, you can see everything right now. So RSI turning lower, suggesting selling pressure. MACD also turning slightly lower, also suggesting selling pressure. Stochastic already provided a bearish cross and extended lower, hasn't entered the oversold territory, so suggesting that there is further pressure for euro dollar. So all this, along with this bearish cross of my fast moving average, which has been confirmed at the at this on this candle over here, and again right now, so you can see that we had a bearish cross of the 5 and 9 exponential moving average, so they are bearishly crossed, but what's significant is that they are aligned lower, suggesting that there is more selling pressure in the near term, in the very, very short time frame. Okay, so if the euro dollar continues moving lower, the next support is at 117.32. Okay, guys? So a break, however, of 117.32 could bring the asset back to week's lows at 117 area, round number, key psychological level as well, along with week's support area. Okay, so that was on euro dollar. Can I get info on cotton, please? Ooh, that's something that no one asked me before. Okay. But I'm afraid, dear, that the market is closed. So, okay, I will just look at the daily chart and the weekly chart. So, we have seen this is the weekly chart for cotton. The market is closed, but this week it managed to move for the first time since the February 23rd to move below the 20-day or 20 weeks moving average. So this week was the very first time since last year, February last year, 23rd, actually in the end of February last year, that turned back below the 20 weeks moving average. So that 1, 2, 3, 4, 5, 6 consecutive weekly bearish candles turn the cotton into a negative overall outlook. So the even turning down to 38.2 Fibonacci level from this rally that we have seen since last year. So the overall outlook for cotton is negative. So further falling below 77, 70 area could open the doors down to $74. Now, if you are interested in a shorter time frame, again, it is in a clear downwards channel. Okay, by plotting your regression channel, it could give you some immediate support and resistance levels. So next support level could be the 76.75, which if it's broken again, it could push cotton further down to what I just told you, that 50% Fibonacci level back down to 72 area, which also coincides, interestingly, the 200-day moving average. Now, if it doesn't, in the upcoming week, if it doesn't break this floor over here, this 77 to 76, 75 support, then only a move above, only a move above 82 could spark some positiveness. But again, even in the weekly chart, in the daily chart, the outlook is negative. You can see how that is in a downtrend, broke the 50-day moving average. We have a bearish cross of 20 below 50, suggesting further decline. Strong negative momentum over here. RSI turning lower again. So hopefully I help you, Mr. Shat. Does economy opening you can use help gold to rise? Actually, it was closed today. Single today was closed. It's a Good Friday, so it will open again. For US will open on Monday afternoon, if I'm not mistaken, and UK will open on Tuesday. So overall, gold remains in a downwards pressure. But as I already taught you, the overall outlook could change only if we have a move above 1760 at least. Actually, the medium-term outlook, not the overall one. But gold remains under pressure. As long as it remains below 1760, remains under pressure. And if it breaks, we've seen a pull back down on Monday below 1705. It could open the doors to 1676. If it breaks even below 1676, then this could be a free fall down to this area over here, 1500s or even 1400s. But yeah, so that's it. So if I move, I use my inverse Fibonacci. A break of that level could open the doors down to March 2020, a year ago. We have seen euro dollar. Hello from Philippines. Hello Bohol. Hello everyone. Can you check euro CAD? Of course euro CAD. Euro CAD. Okay, it was something that triggered my attention. Like in February or even the beginning of back in February, if I'm not mistaken, and this was because of this floor that we keep seeing at the 150 area. It was like 11 months support, which actually broken in the beginning of March. And that was was significantly, very, very significant, because it literally opened the doors down to 2020 and 2019 lows. And this is the case, actually, guys. Okay, so this is the weekly picture. Don't worry about it, Sammy. I will go down to the 1 hour chart as well. Okay, so let me do that. So you see that it looks to be like a rounded top, not really, but double top over here. Oops, double top over here. In general, without actually trying to identify any pattern, we could see that for more than a month, this support was strongly held, but it managed to be broken significantly on in the beginning of March. And since then, it continued moving southwards. So actually, the next, okay,
the next support area for euro dollar is the 2020 and 2019 lows, and so you can see that MACD supports the negative picture for euro CAD, RSI supports the negative picture for euro CAD as well, and you see that it crossed this week the 30 barrier, and there is further steep to the downside. MACD is aggressively low. So um, but also, other than the technicals that support this picture, this negative outlook, is also the fundamentals. Europe is doing awful with the vaccine rollout, with the data. No real growth is being shown except from Germany. But if we take it as a whole, the Eurozone is not giving signs of strong recovery levels. While in contrast, Canada, from the other side, is doing quite great. I was just reading earlier that the Canadian, the Canada. Let me find the exact numbers actually for you. That where is it? Where is it? Other than the stronger oil that supports the Canadian economy, okay, is the GDP number as well. So we have seen from Canada that where is what was it? Yeah, by taking for example the GDP number, the gross domestic product number, it shows growth. It shows an expansion of 5% in the first quarter of 2021, peaking higher to a 8% pace in the second quarter. So we can see that the economic outlook, the economic recovery of Canada is really there, and there is growth in the Canadian economy that is supported by the good news on the vaccines, from the strong economic data like GDP, from the ultra accommodative central bank, and also by sizable stimulus similar to Fed, similar to the US. So this keeps Canadian economy stronger than Europe economy. So that keeps Canadian dollar stronger than euro dollar. That's why we have seen this drift, and that's why it might continue moving further to the downside. Hopefully I replied to your question, Sammy. Euro dollar, we just spoke about it. Okay, last time, and we need to call it a date. Okay, euro dollar, and then Kiwi for Emmanuel. Euro dollar. Okay. Overall, sideways this week, but in the long term, we can see continuous dip. A break of 117 could open the doors down to 116 round number. Overall outlook remains negative based on the vaccine rollout in Europe, on the weak economic data in Euro in contrast with US. US is doing better, so we might see euro dollar dipping further to the downside. Now, intraday, now we have seen a reversal from the highs of the day down. Down to 117.50 earlier, breaking the pivot point of the day. Let me put the 30 minutes chart. It found support over here and is turning back high again, but as long as it doesn't turn above 117.67, then the asset could continue moving further to the downside with RSI below 50, MACD negative as well. So yeah, that's pretty much it in the 30 minutes chart. If you are interested in the intraday picture, the short time frame, have a look on the fast moving average that I'm using, the 5 and 9. Okay, the asset, can you see these tails? The asset has long tails to the downside. That suggests that there is still a lot of selling pressure. On the other hand, however, The fast moving average haven't really aggressively turned lower, so maybe we need to wait for this candle to close. So there is another 20 minutes to go to confirm whether it will continue moving down or sideways. Okay, Kiwi. Okay, guys, I should say that London is closed. Okay, so probably the remaining of the day will be very, very thin. So despite the NFP, we might see further consolidation. That's why you should uh, you should do your homework, as we said, after the markets are completely closed today, in order to get ready for next week's trading, where everyone will be back either on Monday or Tuesday. Okay, but because London is also closed, and despite the strong NFP data, we might see a lot of um, thin trading, a lot of thin liquidity. So even despite the fact that NFP was very, very strong, and this is supposed to give a dollar strengthens, big strength to continue moving higher and higher and higher. However, instead, because there are not a lot of market participants in the market trading right now, this response might be something that we will see next week when the markets are back. That's why these moves might not explain fully, might not be fully representing the NFP report today. Okay, so take care. It's not easy to do some trading when every single market is pretty much closed, so there is a thin very, very low volumes. Okay, uh, so Kiwi, sorry, Kiwi, here we go. Starting from the daily chart, it's been in a dip since the end of the March. Tijani, you can see, Manuel, sorry, you can see that it's in a regression, quite a regression channel to the downside. However, interestingly, it managed to sustain for nearly 2 weeks this 0.6950 floor. But okay, we have seen a bit of a rebound. Let me put the 4-hour chart. Rebound, retesting week's high territory, but as you can see, we have, due to the low sorry, let me put the daily back. Due to the low volumes today, is still in a ranking market. So what I can tell you is that the key resistance area is this area over here at 0.7098. Actually, let's make it a round number at 0.71, which coincides with the upper line of my regression channel and the 20-day moving average. Okay, this is the 20-day moving average. So key resistance area, while on the downside, 0.6950 is a key support area. So overall, the outlook remains negative. Okay, this is certain. So now it's in a if we go to the what's going on like recently, it's in a ranking market. Okay, so let me zoom in. Let's start with the 4-hour chart. You can see that it bounces to the highs of the week at 0.7032, but it didn't really break significantly above it. It's struggling to overcome, to break that 0.7030 area, and it's consolidating the whole day. So there is no clear direction intraday. You can see that in the 1-hour chart as well. Ups and downs, unable to give a clear direction intraday. Yeah, intraday. So if you are interested in the overall picture, remains negative, a closure today, decisive closure above 70.32, and I mean like something above the latest fractal, like above 70.50, could retest the 71-hour area. But if this is not happening, and because this is a key resistance area, so a strong one, we might see a pull back down, continuing in this ranking market. Now intraday, if you prefer, let me just, okay, here we are. We have seen that it remained the whole day above the pivot point of the day. It tested the first resistance of the day, but as I already told you, is struggling to either break it or decisively turn down again. So key support levels is the latest tail over here. Okay, let's check the 30 minutes chart. Actually, it might be clearer. So yeah, twisted bottoms over here, turn high again. So this is a key support area. But in 13 minutes, this candle will be closed. So if we see the candle remaining as strong as this one, recovering fully the previous candles previous candle's body, then it could retest again the highs of the day. But you need to wait another 13 minutes for this candle to close in order to decide what you will do. But this is a 30 minutes chart, so I remind you, the overall picture is still negative. Yeah, but what can help you with a 30 minutes chart or 1 hour chart is the fast moving average and stochastics as well. Let's have a look at the stochastics. And you see how choppy MACD is and RSI. So a lot of consolidation, a lot of indecision. So the only thing that you can see today is some ups, retest of the high, down to 70.13, again ups. So ranking market, consolidation. Okay, let's finish with silver. So guys, silver. The precious metal that found rebound on the second quarter. So the last 2 days similar to gold. Sorry, turned back above the 200-day moving average. However, remains below the 20 and 50-day moving average. So ahead of the new week, what we need to monitor is this resistance area, 20-day moving average, and the 25.50. 25.45, 25.50. Why? Because this is a 20-day moving average. If I'm not mistaken, is the 50%. Yeah, it's actually 61.8% Fibonacci retracement for March dip. So a break of that level could change silver's outlook from negative to positive. But if we don't see a confirmed breakout of that level, then what we could see from gold is a continuous depreciation, and this was just a temporary decline, because after all it rebounded, but it's still very, very close to the 200-day moving average. So the overall outlook remains weak. And if you see my MACD as well, is supporting the negative outlook, and RSI is below 50. We've seen a rebound, but it's below 50 still. So yeah, key resistance to be closely watched on Monday would be the 25.45, while on the flip side, the turn below 200 could signal further the continuation of this decline. Okay, guys? So that was pretty much it. Hopefully you enjoyed. I think I will call it a date. Something that I wanted also to highlight over here is the fact that it looks to be, this silver looks to be something like a head and shoulder. So this is a neckline. The 2420 is a neckline for this head and shoulder. So in the future, you should have in mind that an extension below 24, like a decisive extension, could open the doors down to 22, 21 areas. Okay. So that was pretty much it. A lot of spamming I can see in Facebook. No questions in Facebook, only from Matlialube, which I reply, which I think I covered it, Matlialube. For euro dollar, where I have seen euro dollar several times. Hello from Pakistan. Hello, Akash. Yes, there is a link on Hot Forex web to learn how to trade. Click on the www.hotforex.com, click on the tab called Education, and you will find all our videos, educational videos, educational material that we offer for free. Okay, so that was pretty much it. I need to call it a date. Let's finish with a quick briefing. Okay, guys, so let me hide the comments. Excellent. Oops. So let's do a quick briefing of the day. Thin day, Good Friday. So a briefing would be that we had massive beat on USA jobs report, 916 non-farm payrolls, double of the majority of expectations, nearly double. Big increase, and this is might be something that we could see in the whole second quarter. So this could be in the main driver from the quarter ahead for US dollar. Okay, so keep an eye on that. So strong dollar might be seen next week due to the jobs data. Yen is one of the weakest currency of the year. Pound is also, along with dollar, one of the strongest currency. Pound, again, one of the strongest currency the whole year, and since last year as well. Treasury yields have been supportive as well. Supportive for the currency pairs significantly, like dollar, yen, euro, dollar, pound, dollar, and etc. And this the treasuries, you should really watch the treasuries, because the treasuries giving are actually have been in a rally for the last few months. And by knowing how the treasuries are really moving, you can anticipate something similar in the currency market. So euro dollar has softened a bit. Super thin condition, however, prevail in Europe, in Canada, in US, in UK as well, because everything is closed for Good Friday. So activity is likely to continue being slow as we moving towards the end of the day, guys, and the end of the week. So there might not be any action from now onwards. So keep an eye on the opening next week. Yeah, that was pretty much it. So yeah, we haven't seen, if I'm not mistaken, any stocks, but and actually we should. Stocks, okay, like S&P 500, for example, Nasdaq, Dow Jones, are to the upside. So they have been well supported since yesterday, and they have extended their gains, especially due to the NFP. That's why we have we have seen S&P USA 500 posting another record high above 4,000 level. So strong optimism on the US recovery is the theme of the day. And this adds further on the risk-on tone that we have seen been prevailed of late as market focus on growth positives, while they pretty much downgrading the negative implications in regards to gathering inflation pressures. So yeah, that was it. Thank you very much for listening. Thank you for attending. You asked about Dow Jones WIS. I saw that. Is to the upside. Okay, as I said, U.S. stocks have extended rally, and as I can see right now, Dow Jones has broken the latest double daily fractal above 33,300. So overall outlook is positive for Dow Jones. A lot of bullish bias according to the momentum indicators in the daily chart. Hopefully that replied to your question, dear Jahwiz. Have a great day ahead, guys. Have a great weekend, and see you again next week. Bye-bye.